He was right just 4 out of 10 times. Yet he made more money than 99% of traders who nailed their predictions. Because he wasn't focused on guessing what the market would do next. He was focused on showing up and following his system without fail. If you ask most new traders what it takes to win, they'll talk about predicting direction. They'll say, "I just need to know when price will reverse. If I could time the tops and bottoms, I'd be unstoppable." But here's the harsh truth. You don't need to know what will happen next. You just need an edge. You need risk control. And most importantly, you need discipline. The traders who win consistently, they don't rely on certainty. They rely on probabilities. They play the game of edges. They understand. If the odds are in your favor, you don't have to win every time to come out ahead. Brain the big idea from Trading in the Zone. Mark Douglas, in his landmark book Trading in the Zone, laid it out clearly. You don't need to know what's going to happen next in order to make money. Let that sink in, because it turns everything upside down. Wall Street's biggest winners, hedge fund managers, proprietary traders, algorithmic systems. They don't win by knowing. They win by executing consistently with a well-defined edge. Let's break that down. Puzzle piece part 1. The edge. What's an edge? It's not a guarantee. It's not magic. It's a repeatable condition that puts the odds slightly in your favor. For example, the buying when price breaks out of a range after a long consolidation. Selling when RSI goes above 80 after a failed bullish structure. Entering only after a clean break of structure with volume confirmation. None of these guarantee profit, but they offer a statistical advantage. Even a strategy with a 51% win rate can make money if you follow it flawlessly. Think of it like flipping a biased coin. If heads gives you $1.10 and tails costs you $1, would you care about the next flip? No. You'd flip that coin 1,000 times. That's what professional traders do. They identify their biased coin and flip it again and again and again. Briefcase part 2, risk management. Now here's where most traders fail, even when they have an edge. They take one big loss, and it wipes out 10 small wins. Or worse, one loss shakes their confidence so badly they abandon the system altogether. Risk management is what protects your edge. Without it, your edge is meaningless. It's like having a casino that doesn't control how much a gambler can bet. One lucky player can bankrupt you. So what do pros do? They cap their losses, usually risking 1% or less per trade. They protect capital first, because they know survival comes before success. They accept losses as part of the game. Risk management isn't optional. It's the foundation. You don't survive this game by being clever. You survive by being disciplined in your losses. Because losses are guaranteed. Blowing your account? That's optional. Person in lotus position part 3. Discipline. And now the hardest part. Not prediction. Not analysis. Discipline. The ability to show up, day after day, and do the same thing even when you're on a losing streak. The market feels weird. Your gut says, maybe skip this one. Discipline means following your rules, not your emotions. Taking the trade even after 3 losses. And not jumping in early even when you're excited. It's easy to follow your plan when things are working. But the real test? When everything screams at you to break it. This is where most fail. They tweak their system after every loss. They overtrade after a big win. They let fear or greed rewrite the plan in real time. And the result? Inconsistency. They no longer have an edge, because they're not executing it consistently. Let me introduce you to Jason. He's not a market wizard. He didn't go to MIT. He didn't trade for a bank. He was a 29-year-old who found a simple pattern. Breakout pullbacks on the 15-minute chart, in the direction of the 4-hour trend. Backtested it. Logged it. Clean 53% win rate. No home runs. Just base hits. He decided, I'll trade this setup every day for 3 months. No emotion. No skipping. No adding filters. Day 1 loss. Day 2, win. Day 3, win. Day 4, loss. Day 5, loss. But Jason didn't flinch. He kept going. Week after week. Even when he had a 4-loss streak. Even when he wanted to skip a trade because it felt Off. He remembered what he read. You don't need to know what will happen next. Just follow your edge. By the end of the third month, he was up 18%. And the kicker? His biggest winners came on days he wanted to skip the trade. Days when the market looked too messy. When his emotions whispered, "Don't do it." But he did it anyway. That's discipline. Why Jason won? Let's dissect Jason's success. He had an edge. A simple setup with a proven win rate. He managed risk. He never risked more than 1% per trade. Small losses. He stayed disciplined. He never missed a trade even when it felt wrong. That's it. No magic indicators. No live news streams. No prediction. Just execution. Here's the truth most don't want to hear. Being right is overrated. Professional traders aren't trying to be right. They're trying to be consistent. Because when you build your process around probability, you stop needing to be perfect. And when you stop needing to be perfect, you finally get out of your own way. You let your system do the work. You become a trader. Not a guesser. Not a gambler. A professional operator of a statistical edge. Success doesn't come from knowing what the market will do. It comes from knowing what you will do, no matter what the market does. Want to join the top 5%? Stop chasing the market. Start mastering yourself. Build your edge. Manage your risk. Train your discipline. Because in trading, you don't need to know what's next. You just need to act when it's time.